All right, everybody. Good morning. Market update 12/27. I know you're all tired of seeing people's Grinches and Christmas presents. It's like, let's get back to work here. So, update here. So it'll be a little longer one, but I also have a little bonus stock one for you at the end. So hang around. As we know, interest rates were cut on these two blue arrows right here, and just unexpectedly to the regular public, but to us, the market went up, skyrocketing. This one I actually didn't even see coming because the fundamentals of our economy are not great. But if you watch my last video about the Christmas Grinch, the Federal Reserve, he basically made the banks, the rates are at the same place they were, say, last May, but the banks are now all making 1% more than they were last year. So they're all just continuing to pillage the middle class American people, but that's not our issue, right? We figure out how to win. That's the game. We try to get creative. So right now we've had this, again, straight run up, barely a down day. I think we're starting to see a little bit of resistance here, which is great because we have some room, but realistically, it comes down to this. This is not even charts anymore. The American economy, we are not geared towards inflation. That's it. Like everyone is, if anything, we're scaling back, we're cutting back. That's just what's going on. So any of these increases are based on what the market thinks. Just like this decrease was based on everyone thinking the market was going to go right down to 4%, and that didn't happen. Now, this is saying inflation is going to come back and we're going to see 8% increases in things. That's not going to happen anymore. We've had enough. Like, this is it. So the chart might say this, but our fundamentals, the underlying fundamentals don't add up. So I think, as the data comes out, we'll start seeing this tick back down into a normal, like even if it gets into a normal range over here. Thing is, now the banks are making more money for this whole period too, while we're waiting to refinance. But realistically, you're doing a loan, you're buying a house, keeping the cost down is like ultimate importance. That's number one, because you're going to refinance, so you don't want to spend money on it now. And realistically, like, you get creative, and that's what we do. So now we have a lender and a loan program that's letting people get a 30-year fixed, but for the first year, they're going to have a whole percentage point lower. So I just did one the other day, and they're at 5.5 for the first year before they go up to 6.5. Now, with that decrease, it sounds like, well, why don't I just take a 6.25 or whatever? And within the 1 year, they're going to save almost $600 a month because of the size of their loan. So with that $600 a month saved, yes, their payment will go back up. But for that 1 year, they saved thousands of dollars. And then they know we're refinancing down the road anyway. So this is the strategy for, hey, rates aren't in the spot you want to be, but honestly, does it matter? 5.99 or 6.25 or 6.5? At some point, you want to be in the low fives or potentially fours. So if the rates end up coming back down, we're going to have the option to refi a little bit better. So that's where we're at right now. It's like a lock. We're on an uptrend, so it's a big dip like this. We're going to lock in and call it a day. But bonus for the stock market, is where we're at on a daily. That was a big sell-off when the Fed made his announcement. So again, didn't really tank us. We've been in such a solid uptrend for a while. But for the first time, we didn't make a higher high, and we just kind of crapped out this morning. So still safe, still good, but be prepared, because if we do not cross over this line, if you look historically at big drops, they happen all the same way. We don't reach that high. We have that initial line, which you go back years. I drew this line way before, and then it's just kind of bouncing down the entire way. So not that it matters. You're not changing your financial strategy on it, but when you go looking at your same thing with Bitcoin, things like that, you're going to start to see the potentials of, we've had a long run up. There's going to be a top and a break. It's not a crash. It's just the market resetting like it always does. So heads up on that one too. I'll keep you posted. I'll sneak this into the market updates every once in a while. But for the Treasury, get creative. Let's get some loans done. I'm telling you, you're still going to be in a better spot if you have a house and you could swing the payment. Of course, swing the payment before the buy down. But if you could swing that payment and you're comfortable, owning a house is going to be impossible for some people soon, especially when those rates come down, because the volume of people that are going to get back into the market is going to price a lot of people out. So now is a chance to own something. There's things that I own that I will never touch because I'll never be able to get them at that price again with that rate. So the only way to win the game is to actually be in the game. So look at this this big jump as a chance to get a leg up on the competition, get yourself in, situate your loan right. It's not just about the rate. I mean, the rate does help, comes into it for now, but it's the strategy for future. That's what's gonna get your true wealth. So enjoy, guys. Happy New Year if I don't talk to you, and we'll catch up next week.